one idea that I have is we, as we start our conversation, we should tell the audience how are you positioned. How are you positioned in Bitcoin? You can ask Faisal, how are you positioned in the market? You can ask me, how are you positioned in the market?
We could definitely do that.
So people get something, some interesting data point out of this.
Definitely. Yeah, we can totally do that. Well, first thing I do want to mention is we are live on YouTube right now. My name is Amal. We also have Faisal on the call, who is our equities analyst. And we have Austin Ashraf, who is a former Citi portfolio manager. And we're here to discuss the things that are happening in the US stock market, the real economy versus versus Wall Street, and then many other questions that you guys may have. So welcome, Faisal.
Great to be here, man. How are you doing?
Good. And welcome, Austin.
Very glad to be with you guys.
Yeah. Thank you guys so much for joining on your Sundays. And let's just jump right into it, guys. There's so much happening in America. The coronavirus, Main Street versus Wall Street, China trade war escalations, Trump going off on social media companies, and now we're seeing riots in America on the backdrop of George Floyd's death. How are you guys interpreting what's happening in the markets? And, first of all, obviously I want to hear how you're positioned in the market. So I'll let Austin start this off.
Well, first of all, happy to be with you guys. And as far as the way I look at the market, over the last 35 years, what I've learned is almost 80% of what you hear in the media and all the news channel and the talking heads is literally all noise. There are a few things that I pay attention to, and that is Fed. What is Fed saying? And what are they actually doing? And secondly, the main thing is the funds have to buy. They have so much money coming in every quarter from pension plans and whatever have you. And they have no choice but to buy. So I keep that in mind. And when you have rates so low, and I think the rates will remain relatively low over the next few years, you just can't afford not to be in the market. So I'm probably invested about 55% long in the market, and I have plenty of cash for any volatility that may develop. And I have a list of equities that I want to invest in. So that's where I'm at.
Okay. And
by the way, I do think currently market is slightly overbought, and there could be some really good opportunities over the next 30 days or so.
Okay, got it. So next 30 days. Okay. And Faisal, your thoughts?
Yeah, I definitely agree with that last point that the market looks overextended when you just look at it, not from the value sector perspective, but I think there are certain sectors like tech, especially software, that has gotten very extended. It's why I've kind of moved more so to a short position at this level versus trying to continuously find the longs and the winning trades that have been working so well the past month. Like for instance, I wouldn't be buying software here. I think the risk reward has gotten too much. You're seeing massive short covering like we saw Friday when we got the earnings from Okta and Zscaler. It was just, there were so many people betting against this sector. And as the risks start to clear up, and actually in the software sector, there's been a lot more positive news versus negative news as businesses have really prompted their spending to either help remote work efficiency or whatever have you. But I think some sectors definitely short term, it definitely has cause for a pullback. Now, that doesn't mean you have to stay out of the market. I think What we saw a little bit in the early week or early this week was a rotation into value sectors like the industrials or financials, and housing definitely was just soaring. Utilities even had a really good day too. So uh, I think those sectors may be in for some more room to run. It's still uncertain that if we do get a market pullback, whether or not it'll be broad or secular. But I think at this point, I'm really staying away from a lot of the winning trades that have been so popular over the past month, and focusing more on value oriented buys and maybe overextended shorts in the short term at least.
Faisal, can you explain to our viewers the difference between growth versus value?
Yeah. So first of all, I am a person that thinks every person has their own idea of what growth is and what value is. In my mind, I take growth. When I say something has growth, I'm literally looking at different sectors in the economy or different stocks in this case, and I'm comparing their growth rates and comparing how much they're expected to grow margins, earnings, different things like that. And it's all about the growth rate. That's what categorizes you into a growth stock, value stock, or whatever. Um, Actually, I'm sorry, that's what categorizes you as a growth stock. Value is more so about relative and historical valuation based on the earnings that it's had in the past versus now. The value stocks are more so judged based on relative valuation versus, I mean, you could say relative growth rates, but growth rates for value stocks are tend to be a lot lower, and they don't grow as fast, and then they're not expected to grow as fast. But that's how I would categorize it, just plain and simple.
Okay. Faisal, would it be correct to identify your net long exposure possibly, a bit more reduced than you were, just say about 2 weeks ago? Are you more short now?
Yeah, I'm a ton more short. Like I think that there are a lot more opportunities on the short side than you're going to get in the long side. I think as the market has kind of edged up to that 3,100 level, there's really no point in taking these exuberant risks at this point. You're like, I think there is more odds if you're thinking in terms of a month. Like I'm still very bullish in the medium and long term, but I think in terms of a month span, the odds of having a pullback, I don't think we're going to get to the lows, but at least some sort of pullback in a lot of these extended areas, I think is very high. And I think the risk reward in that sense is a lot better than trying to buy these stocks and maybe hope for some more juice to come out of them. So I'm definitely a lot more short than I am long, probably like 75-25 at this point.
Got it. Austin, any thoughts on that of maybe increasing your short exposure, or do you still feel fairly confident that even the minor pullbacks might get bought up and you're still thinking you want to remain more net long?
Well, my thought process is a little bit different than Faisal, and probably most of you. What I've learned is, the as long as you have a long-term perspective on the market, what I try to do, and I try to tell everybody, is what really makes you money in any asset class is literally holding on to good assets, holding on to good stocks, and not trading them. You can trade around the position. So even though I think that market is overextended in some fashion, and I agree that software is somewhat overextended, but I still believe that market will look at software as a very defensive sector. Mm-hmm. And by that I mean that this is a sector that's delivering above average earnings growth, even in this environment. And the guidance have been surprisingly much better. So, like I said before, money has to go somewhere. So even though the sector is extended, people will feel more comfortable owning sectors such as software instead of sectors where, for instance, industrials or even semis, where the earnings are really actually in a decline, at least near term. until we go through this period. So, you know, I feel I'm a little bit short. Yeah, I have some short positions, but mostly I'm just hanging on to my longs, and I'm prepared. I have plenty of cash. So on any volatility, I want to add to my longs or even some new opportunities. So that's the way I look at it, market.
That's a
What
great point. Can you clarify for our viewers? I've heard you mention how you build a core position and then you trade in and out by trimming some of that core position. Can you explain to our viewers what you first mean by core position and then how you go about trimming your position?
All right, so I'll give you a live example. So I've been long Microsoft for a while, and I want to hold 3% position and Microsoft. When Microsoft sells off, even though I have 3% core position, when the Microsoft sells off to the point where I think it's overdone, I will add another 2%. And when the stocks goes back to the point where I think that is fairly valued, I will sell that 2%. You know, so I'm just trading around the position, but I'm holding on to my core.
Okay, understood. I wanted to touch back upon the points that we spoke about at the beginning of the video, which was some of the wars, I guess, the individual battles that America is facing right now. Number one, coronavirus and Main Street versus Wall Street, China trade war escalations, Trump's war on Twitter, as well as social media companies, and then, of course, the riots happening in America. First question, I guess I'll go to Faisal, is do any of these points individually or I guess cumulatively worry you about what's happening or what could happen in the market? Or are you on the same page as Austin where you think this is all noise? The question is for Faisal.
Well, I'd first of all, I just want to say this country is in the last couple of days has been going through some tough times, and rightfully so. If you saw that video, it was just horrific, and I don't know how long this chaos and this kind of readjustment in society will last, but I mean, it's tough to think of how it's going to affect the stock market. I haven't really thought about it from that perspective. The China tensions, I think have a lot more weight, but if you've listened to me on Friday, I've really said a lot of these news cycles that pop up in the previous year relating to the China-U.S. tensions, they've ended up as great buying opportunities for a lot of these exposed sectors like the semiconductor sector or even the Chinese stocks. So I agree that a lot of the stuff relating to the China war or the China-U.S. trade war, a lot of it I think is going to be news, and it's going to create some really good buying opportunities for stocks like Alibaba or even some in the semiconductor space.
Speaking of semis, I was talking with Austin earlier, and I was talking about how the semiconductor industry right now is seeking about $37 billion in federal funding.
Whoa.
From what I know, the semiconductor space already seems overextended, and this is something that I was talking about Friday as well, which is AMD, one of the companies that you could consider more semi-based, is trading at a PE of 132. I would probably say this is the case for a lot of companies within the semiconductor space. How is it that when we look at the semi space or some of these stocks right now, how can we justify some of the valuations that we're seeing right now? I guess my question is, with the backdrop of what's happening in Main Street versus Wall Street and how you see these companies really taking off, does this worry you that we're creating another bubble?
No. Oh, I'm sorry. Go ahead.
Yeah, I just wanted to ask Austin that question, then I'll let Faisal chime in.
Okay.
Well, when you're looking at companies such as AMD, remember these growth companies, you're buying the future. It is very hard to evaluate them on current earnings. And for instance, the good example is Amazon. When Amazon was trading at $10, the PE was in probably 1,000. When Amazon was trading at 100, the PE was I can't remember, but in hundreds. You know, so remember that it's very important that if you believe in the innovation and the products and what the company is coming out with, this is what the investors are buying. They're not looking at the current earnings or the earnings over the next few quarters. You know, so even though AMD looks very expensive, and I totally agree on current earnings, but this company is coming out with new products that are just very competitive, and they're really, I think they're going to give run for the money to the rivals of like Intel, and they're getting into areas of AI and machine learning and that kind of stuff. So, you know, 1 year down the road, their PE may not look as bad. So so as far as the growth stocks are concerned, that's what you have to look at.
So when you evaluate a company like AMD, what you're effectively saying is, well, it doesn't matter about the current conditions right now. You just want to invest in the company of how it is going to perform, let's just say 3 or 5 years down the road, correct?
Maybe not 3 to 5 years, at least a year from where we stand, you know.
Okay.
So to me, AMD is really at the cusp of tremendous innovation, and all the products they're coming out with, their new processor is just fabulous, and it's just much faster than what Intel has out there, and I think it's going to capture a lot of market share, you know.
Yeah.
So that's the way I look at it, and on top of that, the CEO is she's just a very capable person, and you know, she's taken this company from almost nothing, almost dead, to where it's at today. So if you're going to buy AMD, you're really buying the CEO. That's the way I look at it, because she keeps delivering innovation.
When you evaluate companies, Austin, what is your core criteria of how you want to look at a company as a potential investment?
Number one thing I want to look at is who's running the company, and how innovative this company is, how much of their sales are being driven from new products, you know, and how much of this company committed to innovation. So, for instance, a lot of these software companies, they just the reason people are paying the kind of prices they are because there's so much innovation in this area, you know. So to me, I pay a lot of attention to the CEO and the background of the CEO, and also I pay a lot of attention to what percent of the new sales are coming from new products.
Okay, so
You know?
at present moment, I guess Faisal, who is your favorite CEO in one of the companies that you're watching? And then I'll also ask the same question to Austin. So Faisal, your turn.
I think the NVIDIA CEO is good, Jansen. I think AMD Lisa Su, she's awesome too. A lot of the tech CEOs are great. There are some CEOs that are built for innovation, and then there are some CEOs that are built for stock price, and I think both have their benefits. But I think in this case, Austin is exactly right. The market has shown you they are buying innovation regardless of the valuation, and I think that's something to take away from in terms of, you know, if you're just looking strictly at a CEO basis, what CEO do you want? Do you want the one that is committed to building shareholder value, or the one that is putting all the chips on the table to create new growth avenues? And I think you have to bet with the more innovative CEO. So I like a lot of these tech CEOs, and I think Lisa Su is definitely probably top 5. I love Satya Nadella. He's just fantastic. I think he's probably the best CEO, to be honest.
So we've spoken about some of these great CEOs and some of these companies that are doing amazing things. The question right now that most people have is, how do you justify buying these companies at what seem to be very expensive prices? And how does one look at this market as a buying opportunity and compare that to maybe not knowing that, okay, well, how is the world going to look post coronavirus? What is going to be the emerging technology after coronavirus? Like, how does one invest in companies, with the background of coronavirus and how the world may look tomorrow? I'll ask that question of Austin.
I can tell you for a fact, the life after coronavirus, a lot of things are going to change, and a lot of industries are going to be disrupted. And just imagine that. I'm sure some of your listeners work in high-rise buildings, and I remember in New York and Chicago in elevators, you have 50, 60 people riding up and down. Well, that's not going to happen. And
Yeah.
these buildings are not designed to carry 2 people or 3 people, to the top floors. And so people will be a lot more hesitant. So the commercial real estate is in deep trouble. They'll have to change their business model. And as you can see, a lot of these companies are saying, hey, we're going to have most of your employees work from home. So as the companies get disrupted, the new opportunities come about. This is where the software industry is going to play a huge role. They are going to change our lifestyle for the next 20 years or so. What else is going to happen is during this crisis, a lot of surgeries and doctor visits and all this stuff has been put on hold. After this thing is over, you will see a tremendous burst in demand for medical products. Companies that make stuff for surgeries and that kind of stuff. So those companies are going to see their profits just skyrocket. And right. Even though today it looks tough, but there will be life after coronavirus, and there'll be a lot of opportunities to make money. And I think one of the companies that I like that's really well positioned that should benefit tremendously after this is over is Abbott Labs. They make a medical equipment, and a lot of the stuff that is used in day-to-day surgeries and in the hospital, doctor visits, things that doctors use and that kind of stuff. So I'm always out looking for those opportunities that you can invest in today, that should benefit enormously on the other side.
So you're looking at Abbott Labs and Microsoft. Would you say that these are 2 of your, most promising companies for the next, say, year or 2?
I think so. I mean, to me, I'm very bullish on Microsoft, what it's doing. Literally, they are into everything, and they just keep delivering. Remember one thing, I was talking to Faisal the other day. I said, there are about only handful of really top-notch quality people that know deep learning throughout the world, and you can literally count them. There are no more than 50 people in this whole entire world. 2 years ago, when I did some work on it, it was amazing. There were about 30 people. And it was amazing that almost all of the people worked for 4 or 5 companies: Microsoft, Google, Apple, Alibaba, and Amazon. So to me, it is not very complicated to figure out where the innovation is going to come from.
Yeah.
These companies will pay you any amount of money to hire these people. You know, so remember when Amazon or Facebook, if they decide to go after your business, I mean, you could be in, I don't know, let's say you're in Zoom or company that on the internet. Any of these companies can go after your business any time of the day and run you out of business. They have the talent. They have the smartest, best people working for them. You know, so to me, those companies become core for just for that reason, that anytime they go on sale, you want to buy these stocks.
So for people who are watching right now, make sure you hit the thumbs up if you enjoy this content. And another thing that I wanted to mention is that this conversation is not financial advice. We're simply discussing our positions in the market, how we see the market. So please do talk to your financial advisor if you are thinking about using this information to buy or sell anything. Now, the one question that I had for Faisal here is, people are often looking at this market as, all right, well, you know, maybe they missed the boat on the buying or the shorting opportunity. How do you reconcile with when it comes to missing the bottom or the top, or hopping into the middle of a move and thinking that you want to maybe capitalize on the movement? Like, what exactly goes through your mindset when you consider, all right, well, I love this stock or I love this asset, I want to get into it, I just hesitate to pull the trigger because I either think it's too expensive or it's too extended to the upside or downside? How do you build your criteria for that, Faisal?
Well, I have my list of stocks that, for the most part, how I've looked at it, this was a forgotten year. When you had all the companies saying we are not even going to give guidance, full year guidance for 2019, that was like a really relief for me, because it made my job a lot easier. I had to literally just say, okay, the companies that are going to put out guidance and especially grow during this environment, that's going to be a very few companies. And based on what I was seeing earlier, those were the companies that ended up leading initially, and they continued to lead on. So I was pretty much saying, okay, I'm ready to buy on any type of dip. I'm using my short-term technical analysis to find the short bottoms. I expect a lot of the support levels to hold. So I was ready. I had my list ready. And even if I've missed a move, I've kind of operated in the sense that this market is very secular. And if you miss a move in one sector, there will probably be an opportunity in another one come a week and 2 weeks. And that's been the case actually throughout this entire market. You had a lot of the tech and software lead early on, and then just recently you're having a lot of these value sectors, financials, housing. They've all really caught up and gone up a lot in a short amount of time. So I never got too bogged down about it. I'm still surprised at how broad the market has gotten in terms of rallying. So I think always be looking for opportunities, but have your list ready on the companies that are actually growing this year. I think that's the simplest thing you can do as far as research on your own end.
Yeah, that's a good point. Austin, I wanted to ask you this question that many traders and investors are maybe looking at this market and are a bit fearful of getting in, especially newer traders or investors looking to get into this market. How do you give them advice and explain to them that this could be, you know, maybe a generational buying opportunity, or rather, if people are too hesitant or reluctant to pull the trigger, what are, I guess, some you know, wise words that you could tell folks my age or, you know, even slightly older?
Well, first of all, you know, I'll tell your listeners that first thing you should do is ask yourself, what is my time horizon? Am I investing for 1 year, 5 years, 10 years? I'm investing for my kids' education. have that criteria. And once you figure that out, then it becomes a lot easier. Even though the market looks very extended here, my view is, like I said previously too, that you ain't seen nothing yet. This market has the potential. What the market is literally telling you, that it is just ready to burst out of the seam. Next year, this market is going to be much, much higher in my opinion, primarily because you have Fed is committed to keeping the rates low. Inflation is not going anywhere. And like I said before, money has to go somewhere. Money will keep coming in and it'll find home. It can't go into the bond market because it's not paying anything. So you have a tremendous opportunity. And what you are going to see over the next 6 to 12 months, tremendous amount of innovation in biotech, in medical technology, in the financial industry, and in the tech space. So think about that as to, hey, what is the market going to look like a year from now? So what I would do is, for a new investor is, somebody who's thinking about putting money, is, I don't know what the market is going to do tomorrow or next week or next month. It may surprise you, but remember, when the market corrects, you're not buying the market. The market may go down 10%, but your stocks may not go down at all. It may actually go up, and we saw that. What happened in this during pandemic? Certain sector of the stocks outperformed the market, such as Zoom, such as DocuSign. Those stocks that were positioned to benefit. So always keep that in mind. So what I would do is if you were investor, it's always scary. Markets are always scary when it's at the bottom. It takes tremendous courage to buy it because you think it's going lower, and when it's at the top, you think it's at the top. I don't want to be the last guy buying it. So that's always the case. Market never rings a bell and says, hey, this is a perfect time to buy a stock. Never will happen. So you got to have courage, and you build the position. Say, hey, I really like this XYZ company. I see their prospects over the next 5-10 years to be great. So what I'm going to do is I'm going to buy maybe 10% of my position or 20% of my position, and I am going to buy every time the stock dips 4%. I'm going to add to that position. I want to have X number of dollars in this stock. So, and if you're lucky, over the next few months or so, you'll get your full position. But also, you don't want to see the security that you wanted to buy keep going against you, going up, and you're just kicking yourself. Hey, I missed it again. And that happens to the best of us. So my advice is, it always takes courage to buy securities. Step up to the plate, and even though the market looks scary at this time, overextended, you could buy a small position, and now you have an interest in it, and just follow the process. Have a process.
Yeah, those are great words, I think, for our traders and investors who are watching this video right now. Last thing I wanted to ask is, we're still kind of in this iffy stage of the market as well as the economy. I wanted to show you both a couple of key data points of what exactly is happening in terms of the daily spending by major categories. And you can see right here, this is the latest piece of data from May 23rd. So you could look across the board, and it seems like, majority of people are still kind of reluctant to still get out there and actually spend money. Okay, that's one piece of data. And then another piece of data was we of course are still experiencing the unemployment numbers continuously climbing pretty much every week. And then that cascading into more and more businesses potentially declaring bankruptcy or becoming insolvent. And with that, paired with that, we see mortgage delinquencies and auto loan delinquencies. I guess the bigger question to ask is, in a broader macro picture, are these kinds of data points, you think they're just kind of smoke and mirrors, or do you think that there is something really to worry about what may be happening in the underbelly of the economy? And I'll let Faisal tackle this point first.
Yeah, this is a great thing. Like, just looking at data points, sometimes it'll really skew. Like, don't look at data points to trade the market. That's what I'm saying. I think these problems, exactly everything that you pointed out, they could manifest into very real life situations, but the market is telling you, we don't care about that right now. We are kind of putting it off, and just like how the China war or the China trade war was last year, and the coronavirus this year, things only matter till the market says it matters. And when you keep trying to fight that, it usually doesn't go well. So I look at those data points and I think, yeah, there is a lot of underlying weakness. If I'm someone who's thinking, like, I'm a pretty open-minded guy, I think there is a possibility that a lot of negative scenarios could come out that we have no idea about now. Like, in the next 3-6 months, there's going to be some other headline that talks about derailing the economy and showing even more underlying weakness, and who knows what the market will react to that. So I try not to react so much to data points like the unemployment numbers or anything, because the market is a pre-pricing discounting tool. I mean, when we had a 30% drop, it was accounting for some of this weakness. Hell, it definitely wasn't accounting for a lot of the strength that we've seen, and I think that rebalancing is still going on. But that's how I would kind of look at those data points, at least from a trading stock market perspective.
Yeah, and to add to that, I think a lot of people are just kind of wondering that how is it possible that we're in the S&P 500 index itself, we're only down 10%. I think Dow Jones is pretty much near its previous all-time highs. A lot of companies are actually near new all-time highs. I think the disconnect of Main Street and Wall Street is obviously abundantly clear, that it just seems like Wall Street, as you said, clearly doesn't care what's happening in the real economy. And people, rightfully so, are questioning what exactly is happening with the stock market, where so much of this money is going to companies or maybe corporate America. And if the real consumer is actually struggling, how is it possible that the market itself could get back to these levels? I guess I'll let Austin expand upon that.
Well, Amol, the data that you shared is basically, like Faisal said, is pretty much discounted in the market. But what you did not share was the recent number that I saw was the savings rates of Americans since the epidemic has gone up almost 33%. That has never happened in this country. It is unheard of.
Yeah.
And normal savings rates is in the single digit. So
yeah,
there is unprecedented pent-up demand waiting to be put into this into the economy. So market is looking at it that. I look at my own household, and our spending has really gone down tremendously. But once we get on the other side, we can't wait to do the things that we enjoy the most. So this is what the market is looking at. Market is saying, hey, and secondly, the another thing that I pay attention to is overall inventories level in the economy. The inventories were going down lower prior to this pandemic. Now they're at extremely low levels. So once things get rolling again, now the companies have a pricing power. They'll be able to raise money because there are not that many goods out there. So people will be willing to pay more. So this is what the market is looking at. Market already knows all the data that you shared. It's already discounted it. Market is a discounting mechanism. Market is looking 6 to 12 months down the road. And they think the investors are saying, hey, this economy could come back very, very strong, and so, like I said before, any of this noise that out there, I think the China issue is a real issue, but nothing is going to happen until election. Everything you hear is a rhetoric. So if the China and US go into a Cold War and some serious confrontation next year, yeah, that would become an issue for the market, but not near term. So for the time being, I think all systems go, and if the market drops 10%, 15%, consider it a darn gift. That's the way I look at it.
Okay, that's a great piece of advice. So, last thing I do want to wrap up with is what are things that you guys are watching for the immediate week ahead? Because we're now entering June, and by the end of June, we're going to finish off the second quarter. So, Faisal, I want to ask you specifically is what are you looking at going into the week ahead?
Pretty much I'm looking at tech. I think with what we saw, the hints that we've been seeing from this rotation that's been going on, actually it hasn't really been, and I kind of touched on this in my Discord post, the rotation, even though I've been calling for about a month or so, it hasn't really fared out as I thought it would. I really thought it would be more secular, like you would see money being pulled out of technology or some of the more extended sectors and being put into the banks and the energy stocks that are still undervalued. But we really haven't seen that. It's been a really broad market rally. And even though the value sectors have outperformed, tech has also done, it's done good. Healthcare has been the surprising one. Healthcare has been a little bit flatter than I thought. But nonetheless, it still hasn't broken down. Everything still looks fine. Even though I'm more bearish than ever before now than the past 2 or 3 weeks. Everything still looks fine to me from a technical perspective. So I'm really waiting to see if my tech leaders show any signs of weakness. I really want to see if software ends up pulling back now that we're getting some of those earnings out, and it may prove to be a sell on news type catalyst, as these stocks have gone up so much in preparation for these earnings. So I'm just pretty much going to be watching tech and see if the rotation into value continues.
Okay, perfect. And then last, obviously going to finish off with Austin. And we know Austin is very bullish on the market, but I guess the question to ask is, at what point or what signs would you see in the market that will make you kind of throw in the towel, or at least maybe start trimming down your position or not being so bullish?
Like I said before, after the election, if I see this U.S.-China confrontation become serious, and by next year, if we don't have the vaccine, those will become some real issues, So that's what I'm watching. Even short term, I'm watching any development on the vaccine side, see what kind of progress we're making. you know, because I think that would continue to create some volatility.
Okay. Well, perfect. I want to thank both of you gentlemen for joining me on this Sunday afternoon equities discussion. Thank you guys always for shedding light on what's happening in the markets themselves. Are there any particular points that you want to add, or let's wrap it up and enjoy our Sunday?
I'm good. I'm good on my end. Austin, is there anything you wanted to add?
No, I just want to reiterate for your listeners that if you get an opportunity to look at Abbott Lab, I think it's a very well-run company in the right sector, and they should benefit tremendously on the other side of this coronavirus.
Oh,
And pays a nice dividend.
Yeah, I actually did want to add a little bit to that. There is another sector that I am watching too. So even though I have gotten a lot more bearish over the past week or so, I still think I'm starting to see a lot of technical momentum in some of these consumer defensive names. And I really like a couple names starting with Hershey, HSY, PepsiCo, PEP, Coke, KO, and Kraft Heinz, KHC. I think you're going to see a lot of these defensive stocks. They have great dividends as long as yields remain low. People will always be hunting for yields because, just like Austin said, money has to go somewhere, and these dividend yields that these stocks are providing are very a high level of safety. So I think a lot of these stocks are trading at very good discounts, and even if there is hopefully there is a pickup in consumption, but even though savings have pulled in, I think people will still need their necessities. People are still buying necessities at the same rate. And so I think a lot of these stocks, especially like Pepsi, I'm thinking about getting into this one this week. It's a really good stock trading at some really good technical levels. So I'm keeping an eye out on that one. And Hershey.
I totally agree with Faisal.
Okay. Well, perfect, guys. Thank you so much for joining me on this Sunday. I appreciate you sharing your knowledge with us and the viewers. Austin, you said we can find you on Twitter as, well, I guess I'll put up your Twitter handle in the chat later.
Yeah.
Faisal, do you have any social media platforms that you're on?
Yeah, I do, but they're all private. Yeah, I'm a private guy, so you just follow me on Discord or YouTube or whatever.
All right, perfect. Well, you guys heard it here first. Make sure you hit the thumbs up, join our community. Until then, I will talk to y'all next week. Have a good rest of your Sunday, guys.
Take care.
All right, guys, have a good one.